Hello, everybody. Thank you, Mr. Johnson. Happy weekend, everybody. It is Sunday. That's Q&A day. And we have a lot to talk about. And this is where we take the top questions from the week and from the community. And very interesting set of questions today. So let's jump in. As usual, I won't waste your time. But I promise you, as I just mentioned in the comment, time here is time well spent. Now, this is a story about the preparation for the dystopian future that's coming. It's also a story about exponentiality and a story about what types of bags you need to escape the rat race. So a lot of good stuff and tons more. Let's jump in. And anything I say, of course, is edutainment, never financial advice. Please do your own research. And the questions all come from Patreon. Big shout out to everybody on Patreon that make a lot of what we do every day possible. And it's the biggest, best, and smartest community out there in finance on the planet, bar none. First of all, first question is from Not Ken Speckle. Setting goals. What do you believe would be a realistic accumulation goals that would enable somebody to escape the fiat rat race in the next 5 years? For example, 1 Bitcoin, 10 ETH, 500 Sol, etc., etc. Well, this could be a huge story unto itself. And maybe I should do that, leveraging some of the retire-ons I've done and the retire-on cocktails as well. And I need to revisit some of those too. So that's coming because things are changing so fast. It's insane. But instead, what I've done is give an example of your exact numbers and where they would put you based on what you said. And of course, you can fine tune these accordingly. Now, these are 2030. So considering it's nearly 2024, 5 years out, 2029, let's call it 2030. Easier to predict, also takes into account a little bit around the actual bull and bear cycles, which I believe will diminish over time anyway. So here we go, the three assets you mentioned, Bitcoin, Sol, ETH. My sandbag model for Bitcoin by 2030 is $331,000. What the sandbag model means is you can pretty much take that to the bank. But remember, look at the red line here. One or all of these assets may not exist in the year 2030, because again, everything is changing so fast. So bear that in mind, everybody. So Bitcoin 331, if it's still around, minimum. Sol 515, again, still around, minimum. And ETH 12,800. People will go, ETH, so little. Well, we've seen, although it's been pumping the last couple of days and a big pump today, Ethereum is being eaten alive by a lot of other players. Anyway, my model, my expectation is Bitcoin 551, which is also a little bit sandbagged, 1,031 for Solana, and 22,938 for ETH. And the excessive model, 986, which is just shy of $1 million for Bitcoin. And that's Super Bowl scenario. Sol 1718 and ETH 28K. Remember, after the Van Eck report of Sol going to 3,200, my projection of like $1,000 or whatever is really conservative, you could say. Now, the other thing you can do is if you are planning a retirement, I recommend go with the sandbag, and anything excess is gravy. Also, what you can do is look at the average of all three models. That would take Bitcoin to 623, Solana to 1,088, and ETH to 21K. Now, what are they worth if you have the ratios that you mentioned? And the answer is as follows. Again, bear bag size in 2030 would be worth $717,000. You can see there as well how, some horses run faster than others. And you can see that Sol smashes ETH and nearly catches up to Bitcoin. And I've always said, since I began this channel, ever since 2017, a whole coiner is a big deal, and that could be life-changing unto itself. Then you got the expectation bag would be worth 1.3 million. And depending on where you are, that is a lot of money. Remember, there's a lot of stuff happening in the world as well that are going to put a lot of price pressure on things like earnings power of humans, not only globalization, but AI, automation, which are some of the topics we'll talk about today as well. So it won't be as easy to make a lot of money. That means prices ultimately will come down. Technology is deflationary. So living on 1.3 million is a lot. But also bear in mind, another piece of calculus you got to throw in there, the currency will debase by more than 50%. So 1.3 million is really only $600,000 in change. And then the bull will be worth 2.1 million, and the average of all is about 1.4 million. Again, a big bag. And that's why it's very important as well for the future and your planning is to seek out places where you can live a very safe, comfortable, healthy life, nice weather, good medical, close to an airport, etc., with a low cost of living. That's what's going to happen. Just like the gig economy is happening, people will be spending time in gig places too, I believe. I could be completely wrong, but I'm already seeing it happening. Next question is from James Bond 007. Can you create an updated Tesla video with each possible revenue stream, EVs, FSD, Robotaxis, power, dojo, etc., and how each will contribute to share price in 2030? Unbelievable. I've been working on that now for the last 3 or 4 weeks. So I had a video called 8 Ways to 8,000 that I did at the beginning of the year. That has changed radically. The 8 Ways to 8,000 is how, by the year 2032, Tesla could get to $8,000 a share. And you can see that bots would be the biggest component of that. Vehicles only 19%, Megapack business 23.5%, Robotaxi 16.7%, etc. You get the idea. But there are new lines of business too, which some just popped in there. These are the new lines since I made that video. So now we have 10 ways to whatever the number is. I haven't finished that yet. But now, like BP are buying the Tesla charging standard hardware devices. They've already spent 100 million. They've got another billion to go. Also, Dojo and compute sharing and AI and licensing FSD and there's so much more. But it's non-trivial to calculate. And I take my price prediction models very, very, very seriously. So a lot of math behind the scenes. It'll be coming soon. And the 8 ways will be a thing of the past. And it'll be 10 ways now. I love the question and thank you for asking. As usual, we're going through 13 topics real fast, kind of a hit fire round. Question is from JG1. Do you believe the graph can reach $1? Interesting question. So what people tend to do is they wait for things to pump, and when they pump, they get their attention. And this is one of the ones that pumped over the last week or so. A lot of things kind of pump, but the question is how big is the pump and how is it doing in perspective to where it came from and through the bear market and everything else? And that's why we have this new thing called the ATR, which has a whole bunch of different stuff inside of it. I'll be doing a detailed video of this very shortly, but that purple shadow is the bear market. Also, you have different levels called layers, not unlike my layer model. You also have buy and sell indicators on there too, and a whole bunch more. You've got a back test. Again, it took a year to put this together, but it's almost ready. In fact, it is ready. But here, is $1 possible? Yes, that means GRT would go to layer 2. So it is definitely possible in this bull run. But the question is, and I always say this, and if ever I insult somebody's bag by not owning the asset or saying there's a better asset, people get upset. Don't let emotions sway your investing decision. If you made a decision in the past to buy something and you're happy with it, that's it. But don't get wedded to an asset, any asset, no matter what it is. So the reason I don't own the graph is Compendium Score. This has been a godsend to me. This has helped me identify bad tokens and identify winners. 2 things, well, 3 things I'm very good at. 1, identifying winners early. 2, identifying losers early. And 3, trading. And they are the secret to success as you go forward. But the graph, unfortunately, does not hit my Compendium Score threshold. It does not cut it. Also, if that doesn't happen, I look for other assets. We'll talk more about that in a minute too. Now, let's look at what I did buy instead of the graph, and that is render. And you can see here, over the last year, render over graph, the pair chart. We're talking a lot about pair charts today as well, because it's a great way to tell if something is doing well or not. Render over graph is up 427%, which means that render has beaten the graph by 427%. That's not just the year-to-date return of render at all. That's how it compares to the graph. So always, for perspective, if you are in a space and you have an asset, make sure you compare it. You know, as Jeff Booth used to say, you can't sometimes measure a system from the system, but definitely the first step is at least measuring it against competitors and seeing how it's performing. And remember as well, hope is not a strategy. Whole bunch of nuggets there in one sentence. Sorry about that. Old dog How much revenue and profit could Tesla generate with a combination of free power and 100 exaflops of compute? Well, old dog, you're a smart dog and you're asking really hard questions, but I'm always up to any challenge. First of all, I want to shout out to Shamath Palapataya because he actually tweeted this earlier in the week. And I thought it was very, very important. And again, I did say that this story today is about exponentiality. All right. So let's talk about artificial intelligence mathematics, because this is where you're going. And I'm just setting the base right now. So chips improve by 2x every year in speed. Models improve by at least 2x a year, probably 4x. And CapEx scales capacity by 10x. We'll scale capacity by 10x next year. So that means whatever you see today will be at least 40 times better next year. And that means by 2026, AI will be 800 to 1600 times better than it is today. It's already better than humans. So just try, wrap your head around that. Most people's brain, if you start thinking about something being 1600 times better than what it already is today, your brain will melt. But if you are investing, you have to deal with that brain melting to really be in the right assets. This is stunning. Okay, so back to your question. I created this, and I call this back of the napkin math because because this is going to be part of my 10 ways to whatever price is, which is probably going to be 10,000 at the end of this by 2032. But anyway, first of all, and this is by no means a long list, but this is simple back of the napkin math that you can all take yourselves and play with. So let's talk about FSD subscription fees. Imagine FSD is ready. They'll have 10 million cars on the road. Maybe a lot earlier. FSD could be ready as early as late this year or early next. But anyway, conservatively, 10 million cars on the road in a couple of years, and 20% buy the FSD at the current rate. That's 30 billion in revenue. And remember, that's 90% profit. So the share price attribution, just the FSD subscription fees alone, will add $327 to the share price. Robotaxi services, I'm assuming 300,000 cars. If you talk to ARK Invest, you're talking millions and millions of vehicles. Different kettle of fish altogether, but I'm very conservative. That could bring in an additional $1,800 in basically share price attribution, as I call that there on the right. Data licensing, 2 million cars. Now, a step out to explain this one. That means somebody like a Stellantis or a Ford or a GM or a Toyota or whatever, they license FSD from Tesla because they cannot build it themselves. It's like Boeing have given up on space internet because they can't touch SpaceX. And BYD, the only competitor to Tesla on the planet today for battery electric vehicles. And by the way, the number one selling car without any advertisement is the Model Y, and it's a battery electric vehicle. Number one selling car on the planet with zero advertising. It's early days yet. Things are changing. People will be licensing FSD technology from Tesla. Again, 90% margin. That'll be bonkers business. Forget making cars, but that'll be worth another $327 to the share price. Cloud computing, maybe $1,400. Now, what this is the ability to use all the compute. Tesla, by January, I estimate 2024, will have the 5th largest supercomputer on Earth, designed from the ground up for AGI. That's it. And the applications of that are endless. And that's why the attribution could be huge. Hardware sales, again, it's a nothing burger, $15 to share price. But that's selling, selling things like the Tesla charging standard to companies like BP, where they build their own new future gas stations. And that's clever of them, actually. I must say kudos to BP for being a little bit ahead of the curve. And then Optimus, the bots. This is kind of mind-blowing. Super sandbagged here. This could be worth literally $5,000 per share. But I believe 1 million bots, $80,000 a pop, with a very high margin of about 60%, be worth $582 a share price. They now have a night shift building bots because they know the sense of urgency. And again, exponential times, automation is coming, AI is coming, and it's increasing. And by the year 2026, it'll be 1,600 times better. So if you believe for a second that Tesla will not have a bot doing things like flipping burgers and washing cars and managing security and all that type of stuff, carrying luggage in the next couple of years, You are deceiving yourself. So adding just, and this is just the first scratch, back of a napkin. These little ones alone, this AI math, this supercomputer behind the scenes could bring in $4,500 to the share price very quickly. That's the message today. So not hopium, mathematics, and never, ever doubt this guy, Elon Musk. We'll talk more about that in a minute too with another example from space. Next question is from The Wealth Apprentice. I love that name, The Wealth Apprentice. Can I be your apprentice? Does your bull price prediction for Solana assume they pull off firedancer? If so, what is the impact? And if they don't, doesn't this correlate with your low prediction? Great question. So I have not run all the new models for throughput, which is basically going up 10x or to infinity, which is mind-blowing. But I did assume that they would hit 1.2 million TPS. And that is enough to power pretty much a lot of stuff across the world at the same time, and even nearly support 1 billion users. So that was in my assumption. And that means my price prediction, again, low 2032 is 644, high 2148, which is a lot less than Van Eck in 2030. But I will redo a lot of my models for this and also take into account other use cases like becoming the dominant player in running stock exchanges, which is a huge market unto itself, becoming the dominant player for payments, which they already have pretty much in the bag, partnering with Visa, becoming the dominant player in gaming. I've got to try to calculate how much the gaming industry is worth, looking at Microsoft and other players, and that will be coming soon. But no, the answer is I didn't take into account the actual step change, multiple step change that firedancer brings, but I did assume 1.2 million TPS because they did showcase that to us in November 2022. Can you believe it's over a year ago already? Great question. Next question is from Jeremy 2. I allocate 600 euros monthly by DCA. My portfolio, Bitcoin, ETH, Sol, Cardano, and Tesla. I found it challenging to sell some of the holdings accumulated, limiting my ability to take advantage of market dips, and I'm contemplating using LILO or DCAS for a more effective strategy. Do you believe these tools could potentially increase my profits? Well, let me give you a pro tip first. At the end of every year, analyze what's in your stable, okay? See how it's done, and then fathom, can it recover? If the answers to those questions are no and no and bad and no, move on, ditch it. You need to have that kind of wake-up call. Don't hold on to hope. Everybody does that. And then because things are going, another asset goes up 800% and theirs is still going down, they get really angry and really toxic. Don't let that happen to you, okay? Just look at Reddit, look at Twitter. It's full of those people and they are suffering from that toxicity. I don't know. I've got to figure out why that is the case. But yeah, do that examination. You've got, 7 weeks left to the end of the year. Look at your stable, identify the winners, the keepers, and identify the losers and shed them. And look at pair charts too. So first of all, in answer to your question, there's 2 ways of going about it. And 600, what I did is a rough calculation. If you imagine you did this over the last 4 or 5 years, $600 euros is $163 a week. And if you did that just DCAing using DCAS into Bitcoin, you'd have 2.4 more Bitcoin and your ROI would be 40.6% higher over the last 5 years. So, and it works in bull markets, bear markets. It helps deal with something I'll show you later as well. We're going to talk about, what is it called? Elliott waves and why everything actually is like an Elliott wave. But the reason DCAS works is because it knows that and it plays it. But we'll come back and explain all this in more detail in a minute. LILO is a separate product. It's designed for layer identification and it's designed to layer in, set traps, as I call them, limit orders that can get filled on wicks. And also it'll help you layer out with profit taking. And we've shared multiple profit taking spreadsheets on Google Sheets within the community on Patreon. You plug in your layers, you plug in your bag size, your cost basis, and it tells you exactly the benefit of layering out as well. This is a combination. I've never done this before, but I did it for you to show you how these two work in conjunction, which can be super helpful. So this is the layer out model overlaid with DCAS, which is dollar cost averaging on steroids. And you can see here how they both fit together. So you can see the lines of the layers of support and resistance. I've highlighted the red ones being resistance, and you can see the way the trend turns at these levels, and then where support is as well. They are the times you buy, and the resistance levels are the times you sell. Buy, sell, in, out. And that's a great way as well to amplify your bag. So your $600, €600 a month can actually become a lot more powerful if you embrace this as well. So it's up to you. If you can only get one, I do DCAS while we are accumulating in the bull. And then when it gets really toppy, like circa mid 2025, flip to layer out and then start taking profit. So that's the little secret there with tools. Next question is from Schoolheart Boy. Could you do a masterclass on Elliott wave theory and incorporate IADSS or other tools? Loving the masterclass series. Great question. Now, I say things because I have a lot of experience. I've been doing this for nearly 34 years. I have read every investment book. I have tons of investing degrees from best finance school on the planet and stuff like that. So this is going to offend some people that are believers in this. But again, it's no good to hang on to a dream or a hope or some other type of thing. So let's jump into Elliott wave theory. First of all, let's look at some Elliott waves. Now, I'm going to go through all of the Elliott waves because I have studied this for years. In the 90s, there are impulse waves, there are double impulse waves, there are corrective waves, there are extended waves, there are diagonal triangle waves, there are flat correction waves, there are not flat correction waves, there are zigzag corrections, there are non-zigzag corrections, there are 1, 2, 3, 5, 3, 4, 1, 2, 3, 4, 5, A, B, C, D, E, all sorts of different patterns. There are triangle corrections, there are double triangle corrections, there's double, three, and triple patterns, there's complex corrections, there's double zigzag, triple zigzag, irregular corrections, regular corrections, and running corrections. Does that make any sense to you? Basically, the point is, there is a pattern for everything, all right? Now, I told you this would be hard-hitting, but, it's just truth. Elliott wave theory can be applied to any time frame. However, typically, intraday charts, maybe, but that's throwing money away. It generally works sometimes on longer time frames, such as weekly or monthly charts. And this is because Elliott wave theory is based on the idea that market movements are driven by human psychology. And in the old days, it took a long time for people to print newspapers and read them and where to get out, etc. Not like today. So the point is, today, everything happens at the flash of a signal. That can be driven by something on social or fear. And we saw that with the fake ETF news as well. So basically, Elliott waves, they work for grand super cycles, which are decades to centuries. Ain't nobody got time for that, all right? Also, super cycles, 40 to 70 years. Cycles, 8 to 13 years. Primary, 2 to 4 years. And intermediate, 6 to 18 months. If you are waiting for an Elliott wave, you've missed the boat already. This is a time in investing where things happen fast. You have to be able to react, sometimes within minutes or seconds. You can't wait 6 months or 12 months to find a pattern. Also, there are drawbacks to Elliott wave theory. Subjective wave identification. Two different analysts may interpret the same data differently. There's also, and in full disclosure, I can match any Elliott wave, and I've gone through 25 different types, to any pattern on any chart at any time frame. Okay, just full disclosure. I could tell you any story you want about Elliott wave theory, but I choose not to. Also, retroactive fitting. Patterns are often identified in hindsight. It's no good to you in the markets, especially with fast-moving markets. Complexity as well. As I mentioned, all the different types of waves. It's just ridiculous. And there's lack of empirical evidence that it actually works, despite being over 140, 150 years old. So, my perspective of Elliott wave theory, it resembles astrology. Identifying patterns in any charts is possible. I can do it, but it doesn't give you any practical reason to make a trade. All right, so don't waste your time. Sorry about that hard news, but you always get it hard and true from me. So Next is from the ambassador. That came out wrong. Whoops. You appeared to have liked the SYM stock. What would be a good entry point following its recent price ascent? Also, what is your price target on SYM? Also, thoughts on MBLY, that's MBLY Stock, and any target would also be appreciated. So I have not done price predictions on Symbotic, but I did like it. The question was asked, it was about 5-6 weeks ago here in this Q&A, and I analyzed it in a cursory analysis. I have my method where I can analyze any stock in about 15-20 minutes and tell if it's good or bad, just like a crypto. That takes a lot faster, actually, because I have a thing called a compendium. But this is the ATR on SYM, and you can see here, after I analyzed it, which I think was in September, I was like, wow, I like this. I had a limit order that missed by 40 cents. It was at like $30.51 and hit $30.80 or $30.90. I just missed it. And then I went back to this tool and updated my limit order to about $33. So I'm just waiting for it to hit. Now, it was very weak last week. It did tank, but then it bounced again. And you can see here, it is looking really strong. In addition, based on the layers, and you can see the confluence between the LILO model and the ATR, it's almost perfect. Slightly different because they're calculated different ways, but it's good to see they're kind of similar. And here, again, $33 looks like a good layer to get in. I haven't done price analysis of targets, but I think SYM is easily worth $60. So that's a double, which is good, especially if you're using options. Now, MBLY, super interesting. Check out the growth. The blue is growth. They had a little bit of a dip in Q1, Q2, but Q3 is back on track. And Q4 always is typically the strongest quarter of the year for many industries, not just software. And MBLY, they engage in the development and deployment of advanced driver assistance systems, i.e. autonomous driving. And we know that's going to be a big space, as I covered earlier. But let's look at the debt as well. They got rid of their debt and now they're all cash, which I like too, especially in a high interest rate environment. So management looks like they're on the ball. And looking at the same tool as well, it looks like this is a beautiful range rider. It kind of ranges between 35 and 41 bucks, but it will break out. It'll break out above that purple line in the near future. I don't know when, but right now it's close to the kill zone. So I will keep a close eye on this. And I think MBLY could be very good. What I'd like to understand more about, and I haven't done the work yet, is who their customers are and who their future prospects are and how much they spend, dig into margins, dig into growth rates, etc. So it'll be fun. But if, well, I don't want to go down a rabbit hole in that one. But yeah, these are nice. And thank you as well for sharing these things and putting them on my radar. But at the very least, it's a range rider. Next question is from Simon Sylvester. I have Bitcoin 95% and Solana 5% in my portfolio. In the future, I want to diversify Bitcoin to Tesla. How would you go about doing that? And please show a way to do that task in the next 2 years. So I've showed this before and I'll show it again. And this is why, background is pair trading and I believe in pair trading. This is the Bitcoin Tesla pair trade. So it's designed to swap in and out of assets, and it's a piece of cake with the tools that identify kind of buy and sell levels and changes and the turning points of these assets. Blue is up, orange is down. At the bottom of the orange, when it turns, you flip Tesla into Bitcoin, typically in the range of about 105 shares for every Bitcoin. And then when it gets toppy, and it goes to about 180 shares per Bitcoin, you flip it back. You flip your Bitcoin back into Tesla. It's that simple. And you can do that every 3 to 4 months, like clockwork, for now, until one of these explodes. Which one will explode first? I don't know. But I do know Q1 2024 is going to be very exciting. We're talking April timeframe because we're going to have the Bitcoin halving. We'll definitely have a spot ETF by then. And there'll be a lot of good news coming out behind Tesla. So I watch this every day, this particular pair, and it's fascinating to me how it works. So that's how I would do it. Anyway, next question is from TMQ and JMP. In your portfolio of disruptive stocks, why have you not invested in SpaceX? And would you jump on the IPO of SpaceX and or Starlink in 2025 if they became available? So I had an opportunity about a year and a half ago, I think it was, to invest $1 million in SpaceX, and I passed. And the reason I passed was because of politics. At the time, I was taken aback by a speech the current administration made, and they completely dissed and made it very clear they had a very high level of disdain for a certain individual called Elon. And this was a big put off for me because space needs permission from the government to be able to take off land, etc., drop rockets in the ocean if something goes wrong, etc., etc. This, you led Mary, put me off, and it kept me out. So, first thing. Second thing, what has happened recently? Well, SpaceX they hit break even, which is absolutely huge from Elon Musk. Excited to announce that SpaceX and Starlink has achieved break-even cash flow. Excellent work by the team. Also, they now have the majority of all satellites in space. But there's more. Why is SpaceX very, very powerful? Obviously, the future is space and communications and all that type of stuff. But let's look at a couple of metrics here. SpaceX so far is literally out in the stratosphere when it comes to competing with other units. SpaceX, and the way you measure how powerful a space company is how many kilograms they put in space. Well, so far, SpaceX has put 214,000 kilograms in space, which is a lot. Number 2 is China, spelled incorrectly, sorry about that, 23,000 kilograms. So like nearly a tenth. And they put a lot of stuff in space too. And then there's other players there. So that's one thing. The other thing as well that makes SpaceX so incredible, and like everything that this guy does, people say it's impossible. Never happen. Like Bill Gates and Daimler-Benz that make a lot of trucks said it's impossible to have a battery electric semi-truck. Well, he proved them wrong too. But nobody said you could land a rocket on its butt. He's reused one of these rockets already 18 times. And the savings of that are incredible because these rockets are expensive. But now they're reusable 18 times. The next milestone is 20. And they never believed they beat 15. So there's that. Also, looking at, I haven't calculated the value of SpaceX, but with the growth and their dominance, I put together a little back of the napkin model. I forgot to add my back of the napkin here, but Starlink has over 2 million customers worldwide. The rate that is paid for goes from $120 up to $500, plus very expensive licensing for airlines. I think Emirates now has Starlink for very high-speed internet. We're now, heaven forbid, but if you were inclined to do a Zoom call from an airline, from a flight, you can do it, which is very sad. People want to get away from Zoom calls. Anyway, so imagine your average customer being a lot higher than somewhere between 120 and 500 when it comes to the big customers. So monthly revenue is $400 million. Annual revenue is $4.8 billion. Hardware revenue, because they sell the actual routers and stuff, the antenna thing, at least $1 billion, because I know how much they cost. NASA revenue as well. They pay $19 million for every time they launch an astronaut into space. And then so does the Space Center. I don't know what those numbers are. You add all this together and they're already profitable and they're growing like crazy, and it will become the dominant internet on the earth. In fact, for people who are fed up with, whatever their cable provider is or the internet provider, they are looking into Starlink. And we have a community member as well in the Philippines, and he has Starlink. He said, however, during a typhoon, it doesn't work very well because there's so much rain in the sky. There's no direct uplink to the satellite because of the very, very typhoon-like rain. So if you are living in a typhoon climate, it may not be the option for you just yet. But he did say during the typhoon anyway, traditional internet's knocked out. So shout out to the Philippines. Next, I hope that answers your question. So I will be looking, the short answer is I'll be looking at SpaceX very hard. It has the potential to become a lot bigger than even Tesla, depending on where things go in space as well. But it is getting pretty crowded up there with all the satellites. Next question is from Dacola Bear. I have 2 older whole life policies, one 22 years old and one 9 years old. Maxed out the loans to buy Bitcoin, ETH, Sol, and Tesla. Should I plan to pay back the loans or let the policies lapse and stay invested in what I have, planning on retiring in 2 years? Well, the next 2 to 3 years will be very transformative for sure. And I never believed in life insurance or whole life policies. As I always say, if anything is sold hard, pushed hard, marketed hard, shilled hard, it's probably not good. So that goes for life insurance. And now I'm going to go through, this is truly not financial advice because I don't know anything about your policies or how much or the benefits or the terms of the loans, but I'm just going to lay out the pros and cons and then you make your own decision. But in simple terms, the repayment option for these loans, there are advantages. One, you will maintain your life insurance, but I don't know what the payout is. It will lower your debt and it'll give you peace of mind. That's good. But the cons are you will have to sell your crypto and your Tesla to pay them off, which is not good. You also may incur capital gains, and it will limit your potential gains during these very transformative times. And you could lose the tax-deferred growth as well that you may have within these different assets. So that's the repayment kind of pros and cons. For me, it looks like the cons are heavier than the pros. But again, I'm not you. I don't know what your goals are. Next, let the policy lapse. The pros and cons of this. First of all, if you let them lapse, it means you retain your crypto and your Tesla assets, which is a good thing, especially during these next 18 months, which are going to be incredible. You will avoid capital gains in these holdings, and it frees up funds for retirement spending, potentially. But the cons, you forfeit your life insurance benefits and tax-deferred growth, and you could face surrender fees and difficulties in obtaining new life insurance. But again, you can guess what I would probably do. I'm not going to say, though. Next question from Dijon. And let me know if this is going too fast or we're covering too many broad topics. But this is what Patreon wanted. Thoughts on GMX, Decentralized Perpetual Exchange. So I have actually used GMX, but I decided I've also used Injective. I found Injective to be better, but I start with fundamentals first. And I did Should I Buy Injective. The timing of that video is quite special, by the way, because it's more than doubled since that video came out only a month or two ago. I can't remember. But the reason I chose that is because of this. The Crypto Compendium Score for Injective ranked number 1 indexes. And literally, this score determines how good the asset is and how well it'll perform over time. Pretty much most of the time. That's why I rely on it very heavily. In addition, let's look at the GMX on the ATR. It's doing okay. It's off the bottom. It's a relatively new token. It came out of the bear real strong and then fell down. The question is why? Markets have been on fire since September and it hasn't done very well. Let's compare that to Injective. Huge breakout. Massive delta in performance here. So as I always say, again, you can see how the Crypto Compendium can tell which is the better horse, the faster horse. And as I always like to say is, be on the faster horse. Does much better. Next question. And just as a reminder, in case people don't know, my philosophy is very few assets, huge amount of upfront work. Keep them till they run out of energy and then swap them into something else. Okay, real simple. Next question is from the Black Rod, and this is one of these dystopian questions. And it's interesting that it came in. It says, will banks ease up on their transfer limits to crypto exchanges as the bull run continues, or will it get harder to convert fiat to crypto? As for Australia, it seems that now all banks have a hard 10,000 Australian dollar limit. That's about $7,500 US dollars, I think, last time I checked. So this is important for us all to realize. And it's so important, I actually wrote a Substack earlier in the week on exactly this. I call it capital controls. But let's dig into some of what's exactly happening right now from some people out there that are in the know and watch this stuff. Banks are having trouble again, part 2. This is from Jungle Inc. And he said, Chase, Bank of America, Wells Fargo customers didn't receive their direct deposits today. And a bank called Citizen Bank did collapse as well. And the SEC may have a hard time cashing in on the Ripple verdict. Literally, bank distress has been there all year. It's bubbling up. It's coming back. A bank did collapse on Friday. It was taken over by the government and already spun into some other bank real fast. But they tried to do it quietly so people don't freak out. But for these direct deposits not to hit, what the hell's going on? Next, the big problem is, and for those of you in Australia, I think it's Australia or New Zealand show, Flight of the Conchords, this reminded me of it. I haven't watched the show, but I've seen the memes. This is flight of the US bank deposits. And the same thing's happening in Australia. Same thing's happening in Germany. People are draining their accounts and they're investing in assets that have a future, not fiat. Everybody's getting out of the fiat game. But US deposits in the bank in the US fell by 83.7 billion last week. And that's the largest single week of deposit flights since the March bank crisis. Not good. So you wonder why you've got these guys, Bank of America, Chase, and Wells Fargo, not making their direct deposits? Maybe because there's no money in the kitty to pay these things. Now, there's a free Substack as well. Literally, there's a lot of stuff coming out, at least one a day at this rate. I did one earlier in the week called Capital Controls Are Coming, and it basically spells out exactly what's going on. And it's great that this question popped in a day or two later because it's so timely. And I love that because everybody's thinking along the same lines and they're very concerned. So the next steps, I believe, and this might be a little alarming. I might be a little bit paranoid. So take it with a grain of salt. But I do believe it'll get worse, not better. And that means they will throttle withdrawals. They will not. They will close off on-ramps to cryptocurrency exchanges because they need to hold on to their lifeblood, which is your cash. And then that'll lead to full capital controls. There are many countries in the world that are already doing it. You'll see that in the Substack. And then they'll blame delays on system outages. Oh, it's not us. It's not the bank. It's the technology is bad. Well, then why don't you use crypto, for heaven's sake? Anywho, and then they'll say, oh, we're keeping you safe by preventing you from withdrawing because crypto's dangerous. You don't want to touch that. We're going to hold on to your money to keep you safe. Yes, that's what they say. It's, again, dystopian. And the truth is many banks are actually illiquid. We saw a big one in the US hit the wall on Friday. So, and then this just came in as well. Shout out to Gurgavin. Great guy. Always on the money. And he says, Bank of America has just alerted its customers that deposits are delayed due to a problem impacting multiple banks. The problem seems to be related to the automated clearinghouse per Bloomberg. Again, and it's JP Morgan as well, not just Chase and Wells Fargo and Bank of America. It's happening. It's crazy. And for people not to be concerned about this means you're naive. Always prepare for the worst, okay? Next, there's a little snippet from the actual Substack I wrote a few days ago, 4 days ago, 5 days ago. The future is dystopian. It's unclear what the future holds for a traditional banking system. If cryptocurrencies continue to gain popularity, banks may be forced to make major changes to their business models. That's it, ladies and gentlemen. They're being drained. People want better. In the US, the banks will sit on your money. They'll get 5.25%. You will get nothing. Literally nothing. That is criminal as far as I'm concerned. Anyway, shout out to, this is a happy story. Well, a sad story, but happy that we get to support Addison W. in his time of need. He had Ace, his 9-year-old Maltese, since he had since birth, and died suddenly. But I remember Addison saying, hold on to your pets while you can. Thank you. This allergies. This is in memory of our great member too. So as we see, Bitcoin is at 35,058. I'm going to take a couple of quick questions right now. And a lot of questions. So a big thank you as well to the mods in the chat and keeping us all secure and safe. I will say, let me see. Tomorrow we do have DCA. Let me pop my camera on so you can see me. Where is it? Here we go. Tomorrow we do have DCA at 7:30 a.m. We'll be on CTO's channel. And he has a special guest as well called Box Mining. So we're doing something new, bringing on a new special guest for another perspective of where we are going in the market as well. So Rusty Bot from Norway. I swear this was $30 a month ago. Where'd it go? Rusty Bot every week makes a funny joke. So I appreciate your humor, my friend. GraphWeb, awesome analysis. Thank you so much for being here. Mike, another funny guy. This has become the comedy show from Mike, long-term holder. When $3,000 Bitcoin? The answer is never, unless it goes to zero, which I always say there's a 1% chance that it can happen. Alpha on the Max from the Merovingian. Thank you so much. You're amazing. Where are the hard questions? Julia A., you're the GOAT. Thanks for the knowledge and laugh. Ain't nobody got time for that. Yeah. And I must say, I didn't know what memes were really until I started hanging out in Discord, and I've become a bit of a, I wouldn't exactly call myself a meme lord like Elon Musk, but they are a great way of getting a point across. And that's why we use them now. And Happy Feet, when do you foresee the spot ETF being approved? Are the big institutions talking about this yet? Oh, they're all talking about it. There's now 11 of them right now. All the biggest money shops in North America are talking about it. They're all focused on it. At least 3 that I know of are seeding their funds, which means they're already buying Bitcoin. Hence, you see Bitcoin so strong. And the approval, I think definitely before the halving, which means Q1 2024. But there's a lot of talk that it could happen. There is a closed door meeting by the SEC. We don't know what's going to happen there, but it could happen pretty soon after that, which means maybe November. And if it does happen in November, literally I made a video yesterday about how potentially an analyst believes Bitcoin could hit $47,000 before the end of the month. Well, that's not beyond the realm of opportunity as well. In yesterday's video, I talked about how 90% has been held for more than 90 days. So only 10% are available. And the big money banks know this. And they know they need to get in quickly before things go completely bonkers. Nobody is selling right now. Everybody's holding as well. Jimmy Neal, do you expect to take profit in November? By your metrics, by the way, elbow healing well. Good stuff. Happy about your elbow. Profit in November? No. I'm very bullish for November and December. Things run to the end of the year. Earnings are good. Stocks go up, especially with all of the historic data points we have this year, like the first 5 days, the first 90 days, how beaten down things got in October. I remain very bullish through year end, and 2024 will be quite special too. But yeah, no, I will be selling some things. As I mentioned before, I'll look at my stable, identify things that need to go, do my tax management, and then take it from there. Citizens Crypto, what happened to SBF and FTX's $40 billion? I don't know. All I know is he's going to jail, hopefully for a long time, forever. His life would be awesome. But I would really like them to have a hard look at the parents, because he's just a child after all. The parents facilitated a lot of what he did, and they cannot just be let run. So look at the mothership. I think that is what needs to be done. And I know, yeah, still a lot of money missing, but apparently per the FTX organization and the people managing the receivership, he did get lucky with one investment, and that is an AI play, which is now hopefully going to make everybody whole real quick. Plus, all the assets that they do have are appreciating. They're staking Solana, which is which is up 500%. So things are, I think things will be good. Hopefully, fingers crossed. At least way better than people expect. The OC agent, thinking of dumping ETH for Sol, thinking it's more risk, but potential far better. Yes, it is. And we've seen that all this year so far. Solana's far outstripped pretty much everything out there. It's even getting the attention. And in my Octa every Tuesday, I do the follow the money. And it's been pretty clear what's happening there. But it is good to see ETH pump right now. It has had a great couple of days. Let me check in on ETH right now. It's just shy of $1,900. That's a 90-day high. So who knows? ETH still has legs. And remember, it still manages more than 90% of all DeFi out there. So it's still a force to be reckoned with. But upside is clearly higher for Sol. But remember, the risk is higher. Anything could happen. So you got to manage your risk. And also, in investing, one of the things I think about all the time is, oh, should I just YOLO in and put everything on Black 36 or whatever the number is in a casino? That's risky. Don't expect all your bags to pump at the same time. That's not how it works. But you lay your traps. The most important thing is to be able to buy things cheap and let them run. And everything that is good asset will run. So the OC agent, I hope that helps. Valerie Lechner, I would like to sell some short calls against my Tesla stock. Thoughts about the date and strike price, NFA? Not at this level. That $200, $220, that's when you stack. You do not sell short calls against Tesla. There's so many tailwinds coming. This is just a gift. So yeah, wait for a gamma squeeze, then you sell. And watch my Patreon alerts, because as soon as I do it, you know it's there. And I'll do those alerts always in real time. And I thank you as well for your super sticker, Justice for All, Investing KO, Glenn Johnson, Stephen Weston, good to see you, buddy, Sir Winston, Kiwi Robin, Pancake Panda, and Forrest M. Appreciate everybody. Thank you all for coming. Again, I think China will be opening soon, and crypto should pump. But things are now solidly above 35K, which is a critical level as well. And from Pi MGN, thank you so much as well. Thank you all for coming. I don't even know how many people are watching right now. Over 2,000. Good. Big one today. A lot of details. But again, the key lessons, everybody, is these are exponential times. Don't not be on the train. Okay? It'll pay to be on the train. Thank you all. Have a good night. Thank you to the mods in the chat too. I'll see you all tomorrow morning on DCA.